Yes, a very good morning to all of you. Right, so had a wonderful weekend. Right, did you revise our clauses of ethics and also did the practice paper too? Right, studied, revised something regarding the important concept of the audit risk that we studied over there. Okay, right. So we started with our discussion on SA 200, which is like the basics. What are the overall objectives of the independent auditor and the conduct of an audit in accordance with the standards on auditing, right? And what does it say? That auditor, what is your objective? You need to obtain a reasonable assurance. What is reasonable? It is a high level but not an absolute assurance, right? Due to the inherent limitations of an audit. What reasonable assurance? That the financial statements are free from material misstatement, whether due to fraud or error, thereby enabling the auditor to express an opinion whether financial statements have been prepared by the management in accordance with an AFRF, that is the applicable financial reporting framework, and then the auditor should report accordingly. Right? What did we study regarding the applicable financial reporting framework? That it could be a it could be a general purpose framework or it could be a special purpose framework, right? Common users, specific users. And then it could be a compliance framework or it could be a fair presentation framework. Compliance framework, the auditor expresses an opinion saying prepared. And fair presentation framework, the auditor would express an opinion saying the true and fair view or the present fairly. Okay, right? So in an audit, what the auditor needs to do, he needs to obtain the reasonable assurance. So in order to obtain a reasonable assurance, what auditor needs to do? He needs to limit the audit risk to an acceptably low level. And how he can limit the audit risk or reduce the audit risk? By obtaining more and more of sufficient appropriate audit evidence. Right? So what is audit risk is what we had started discussing. Right? So what we said, auditor is saying true and fair, but in reality, say there is a material misstatement in the financial statements. Right? So the opinion of the auditor can go wrong. Right? That is audit risk. Right? The risk that the auditor expresses an inappropriate audit opinion, wrong audit opinion, when the financial statements are materially misstated. There is the material fraud, there is a material error in the financial statements, but auditor is saying true and fair. Right? So that is the risk of expressing the wrong audit opinion. Okay. Right? Reverse, what does it say? That audit risk is ordinarily insignificant. Then auditor's business risk not covered in the audit risk that we are discussing. So for us, audit risk means only one thing, that auditors said true and fair, but actually they were not true and fair. Okay, right. Then we said that this audit risk, it is the function of the risk of material misstatement and the detection risk. Right? Risk of material misstatement, that means chances of material fraud or error. Right? So possibility of material difference between what is and what should be. Right? This risk is already there prior to audit, not because I have gone for the audit. Right? So risk of material misstatement we assess and detection risk we manage or we limit it. Right? So RMM, risk of material misstatement, risk that the financial statements may be materially misstated prior to audit. That risk could be at the financial statement level or it could be at the assertion level. Financial statement level means it is pervasive, means it is overall. Right? So like you have doubts regarding the integrity of the CEO, right? Or there are unusual pressures on the management or there is technological obsolescence, then these could be probably risk at the financial statement level. And then after that you have the assertion level. What is assertion level? 3, A, B, C, D. Right? A, B, account balances. C, classes of transaction. And D, presentation and disclosure. And for the assertion level, it could be an inherent risk. And then after that, we need to check for the control risk. Right? Inherent, which is there by default, right? Which is there by default. How do you come to know these inherent risks? कि ये by default है ही. Yes, by understanding the entity and its environment, by doing the KOC, by obtaining the knowledge of the client's business. From obtaining the knowledge of the client's business, you come to know about the business risk. That out of the business risk, those which you think may affect the financial statements is the inherent risk. And then for those inherent risk, you check what are the controls which have been put in place by the management. Whether that whatever chance of fraud and error, whether it will be caught by the controls in the company. Now, possibility of it being caught by the controls by the company cannot be 100%. Why? Because there are inherent limitations of the internal control also. Right? So, in spite of the best possible controls, there will still be some control risk. There will still be some deficiencies, weaknesses in internal control. So, what did we say? Inherent risk into control risk. That is will give us the RMM. Right? The risk of material misstatement. And then after that, when auditor is doing the audit, will he try to detect those particular misstatement of fraud or error? He will try to. But is there 100% guarantee that auditor will always detect? No, there is always a detection risk that the audit procedures performed by the auditor to reduce audit risk to an acceptably low level may not detect a misstatement that exists. Right? So that is the detection risk. Right? So then first you have the inherent risk, then you check the controls, then what you remain is the control risk. So that gives you the RMM. Then you say it could be detected by the auditor, but what could not be detected by the auditor also. So final what you have over there is the audit risk. Right? Can audit risk be zero? Yes, any student in the class, can you tell me whether can audit risk be zero? Can you say zero audit risk is there? No, never. Why? Because we have to anyways give only the reasonable assurance, right? We don't have to give the absolute assurance, right? So obviously always in every audit is there going to be some amount of audit risk over there? Yes, there is always going to be. So that audit risk you need to reduce it to an acceptably low level, right? So you understand that audit risk is the function of the risk of material misstatement and the detection risk. RMM we assess and detection risk we manage, and RMM financial statement level, assertion level, and further it could be the inherent risk or the and the control risk. Right? So what we say, audit risk is equal to IR into CR into DR. And we also did one particular question wherein in the answer the audit risk came to be 4%. Okay, right. So obviously now what is our game in the audit? That we have to assess the RMM, we have to manage the detection risk. Right? So to assess the RMM, what shall we do? You have to assess the RMM, assess the risk of material misstatement. So what shall we do for that? We will follow SA 315, and as per SA 315, we will perform the correct RAP, the risk assessment procedures, and then we need to manage the detection risk. So for that, as per SA 330, we will perform the further audit procedures. Wonderful. Right? So then we came to our discussion regarding the audit procedures. What were the audit procedures? Risk assessment procedures, further audit procedures. Risk assessment procedures, SA 315. Right? Identifying and assessing the risks of material misstatement through understanding the entity and its environment. And then 330, the auditor's responses to the assessed risks. Right? What did we say are the risk assessment procedures? Inquiries of management and others within the entity, analytical procedures, observation and inspection, and a few related activities. Right? So out of our 7 methods, do you remember the 7 methods of obtaining audit evidence? Wonderful. ICAIORR. Right? Inspection, confirmation, analytical procedures, inquiry, observation, recalculation, and reperformance. Out of that, in risk assessment, we are making use of inspection, analytical, observation, and the inquiry. Right? So risk assessment procedures, whereby you identify, assess the RMM. Then you do the control testing. That means what? You check the DIM. What is DIM? The design, implementation, and the maintenance of controls in the organization. That means you are checking the OE. What is OE? The operating effectiveness of the controls in the organization. That means you are performing the compliance procedures. And the results of TOC will help you to determine the nature, timing, and extent of the substantive procedures. And why you perform TOC? Because auditor's assessment of RMM includes an expectation that controls are operating effectively. Right? So it's an expectation. So now you want to check whether your expectation is right or wrong. And second, what does it say? Substantive procedures alone cannot provide the sufficient appropriate evidence. Right? So now for doing TOC, which colors do we use? Yes, inspection, inquiry, observation, and the reperformance. Okay, and then we come to the substantive procedures, right? Substantive procedures, 4. Which 4? Test of details. Then substantive analytical procedures. Then agreeing the financial statements to the underlying records. And last one, yes, sitting, what to do? Check journal entries, right? So examining material journal entries, right? So that is substantive procedures, test of detail, substantive analytical procedures, agreeing the financial statements to the underlying records, and examining the material journal entries. And for performing substantive procedures, ICAI-ORR, right? We make use of all these 7 methods of obtaining the audit evidence. Right, so what we do in an audit, what I discussed just now with you, this is what we do in an audit. We do risk assessment procedures, then further audit procedures, and that we do TOC, and then we do the substantive. Through substantive, we obtain the sufficient appropriate audit evidence, and on the basis of that, we express our opinion. Right, on the basis of that, we express our opinion and reduce the audit risk to an acceptably low level. Okay, so now when I'm performing these substantive procedures, I could be performing these substantive procedures for a balance sheet item, for a profit and loss account item, or for a notes item. Right? If I'm performing my substantive procedures for a balance sheet item, what would I like to check regarding that balance sheet item? Like they show building or land of 38,000 crore. So what I want to check regarding that land or building or so? Right, the question that I'm asking you is what? The assertions addressed, exactly, through substantive procedures. Yes, ERCV. What is ERCV? Existence, rights and obligation, then the completeness, and the valuation and the allocation. Right, so any balance sheet item, asset, liability, equity, interest, I want to check the ERCV. Okay, then profit and loss account item, that is transactions and events, I would like to check for the OCACC. What is OCACC? Occurrence, completeness, accuracy, cutoff, and the classification. Right? So whether it's relating to the entity, all transactions are recorded. Are they recorded at the proper amount, in the proper period, in the correct account? Right? That is OCACC. And then for presentation disclosure notes, it is both put together. Balance sheet and P&L put together. That is, it is the ORCVC. Correct. Right? It is the ORCVC. Right? So those are the assertions addressed through the substantive procedures. Okay, right. Then after that, I told you that our audit approach, there's some name to our audit approach. Does anybody remember the name of our audit approach? Do you remember the name? Right, of our audit approach? We said Nacho before that itself. Yeah, exactly. It's the risk-based audit approach. And that risk-based audit approach is talking about what? Yes, what is it talking about? Yes, exactly. It's talking about the RRR. What is the first R? Risk. Second R? Response. Third R? Reporting. Okay, right? Risk is discussed in essay. Tell me no. Risk is discussed in essay 315. Then response is discussed in essay 330. And then reporting is discussed in essay 450. No, 420. Okay, there is no auditing standard 420. Okay, people are 420. Auditing standard is not 420. Okay, right? So essay 450. Right, so identifying and assessing the risks of material misstatement through understanding the entity and its environment, then the auditor's responses to the assessed risk, and then evaluation of the misstatements identified during the audit. Right, so what was I telling you in the entire previous class? That, oh, I think that maybe the company has done some under recording of the purchases, right? So that was my risk of material misstatement. Then I responded to that risk. How I responded to that risk? By increasing my nature, timing, and extent of the audit procedures for the purchases. And then ultimately 2 things can happen. 1, nothing is wrong in purchases, all good. And second, see, my doubt was absolutely right. There is a under recording of the purchases, right? So now what has happened? I have identified a misstatement in the audit, right? So what to do of that identified misstatement is what we discuss in essay 450, right? So everybody, do you understand this journey of the auditing standard, the flow of the audit? It is 315, 330 and the 450, right? Then we've also discussed the audit risk and the audit procedures. Then we've also discussed about the 7 methods of obtaining the audit evidence, that is the ICAIORR, and then also the assertions addressed through the substantive procedures, right? Everybody, all good? Right, all good? Yes. Ethics, do you remember 812? You'll say, ma'am, where all of a sudden ethics? Obviously in the exam also, no, suddenly only any topic or chapter will come. Right, so ethics 812. You say, now ma'am, we are, into the world of the auditing standards. So yeah, you be in this world, but you can't forget the ethics world over there, no? Right, so 812. Yes. Auditor negligence, nahi na. NOC, nahi na. 812. 811 nahi. Yes. Yes, fails to obtain a sufficient information which is necessary for expression of opinion, or its exceptions are sufficiently material to negate the expression of an opinion. Is it right, everyone? Right, that is the 812. Okay, right. What is 231? Simple. All of you have to answer. All of those who will answer, all of them will pass the exam. You say, ma'am, please don't blackmail like this. Okay, I'll not. I'll whitemail. Okay, right. Yes, 231. Clause 2, part 3, first schedule. More than 6 months? No, that is 132. False information? No. That is 331, under 6 and 7. Yes, it's like literally feeling like a riddle over there. Okay, right? 231. What about the others? उठ जाओ, है ना, भोर हो गई, अंधेरा चला गया. Okay, right. Ply to ICAI does not supply the information called for or does not comply with the requirements asked for by ICAI and or its functionaries. Right, so you don't supply the information to the ICAI. That is 231, clause 2, part 3 of the first schedule. And the last one before we continue further, right? 412. Easy. Easy, damn easy. 412. You know whether you have to look at the LHS or RHS. LHS is first schedule. RHS is the second schedule. So I'm asking you clause 4, part 1, second schedule. Yes. What is that? Substantial interest expresses opinion on the financial statements of any business or enterprise where he, his partner, his firm, his relative, AS 18 or in AS 24 has the substantial interest. Right? Expressing opinion on financial statements not allowed, but information system work allowed. Right? That's the exception to the 412. Okay. Right. So let's proceed further. How many of you have solved the practice paper?